Welcome to the K Factor. Today is Monday, March 2nd. We're just going to do a quick recap. It's after hours. So let's see what happened today. Let's go to the activity tab and we can see that we don't have this filtered right. So let's go to last 7 days. We can see that at 8:30 this morning, we got filled on EFA. So if we go over here and take a look at EFA, we can see that let's go expand this out to about 30 days. So we sold two shares here on what day was that? February 9th. We sold another two shares on February 26th. Then we bought all four back on 3/2. Very, very, very small win here, but it is a win nonetheless. Let's clear this out. We're going to go back to the positions tab. Let's take a look at how things have moved today. We're going to look at the outliers instead of looking at everything. So, because we're 45 DTE, we don't really have to worry about any of that. Let's look at SLV, which shows our big winner today so far. $176 on the day. Let's go to the analysis tab. We can see that we're trading right in between our short strikes. Both of them are out of the money, so everything is good there. No concerns whatsoever. Seem to be just kind of meandering around in this area right here, somewhere between lower 90s and upper 60s. So, as long as we stay there, I think we're going to be totally fine because that's exactly where our strikes are: 65 and a half on the put and 94 on the call. Again, we don't have a closing order or a good till cancel order on this one because of the fact that we are negative on our average trade price. So if we go over here to our order chain, we can see that we're negative 1445. So there's no way in this cycle with these strikes that we're going to make any money on this position. But we do expect that over time we'll be able to roll it out, continue to collect credit, and turn this one into a winner. So that is the plan on that one. 6A up $140. It's one short future position here. We're short at I believe the 0.688, 0.689, I think is where we're short. So if we go over here and look at this one, again, we're short here and we've bounced up here and we can't seem to get past this, 0.71 ballpark somewhere over here. We do see this is really important right here. We're starting to see a turnover here in the upper bound of that 3 ATR. So hopefully we can get a good down move over the next few days, next week. Next hour would be ideal. We'll see that. Doubt that'll happen, but the name of the game here is to hold this one until it is a winner as well. SoFi, we're up by $57 today, which means we must have rallied in SoFi. Yes, we do have a small rally here in SoFi. So that idea of selling a short put last week would have probably been a good idea, but we didn't know, and I'm already long SoFi anyway, 100 shares. So essentially, we would have been short or long 200 shares rather, and so I just chose not to do that. Vail came back by $54. So let's look at this one. Yeah, so we're kind of seeing that same pattern that we saw back there on the Aussie dollar, where it looks like it might be setting up here for a little bit of reversal. Hopefully so. Again, we won't know. It's a waiting game, and we are just static delta in that one as well. And then PG. We are short PG 10 shares, and we're waiting for this one to come back to us. It doesn't look very promising at this point, but I've looked at so many of these positions in the past where if I close at the worst possible time, I'm going to lock in a loss, and I really don't want to do that. What I would like to do is, based on my research, I go back and look at really all of my losing trades. And if I had held those trades just a little bit longer, and really not too long in most cases, they would have eventually become winners. And so that's the idea here. Not a great trade. Obviously, I put it on at the worst possible time, and it went against me. And it continued to go against me. It kind of came back a little bit, continued to go against me. But we're going to give it some time. And XLP came back a little bit for us today. Again, this one also went against me, and we're going to wait for it to come back too. This is real stuff, no sugarcoating here. So we're not just going to show you a bunch of winners and not show you the losers. But we'll take a look at the spreadsheet a little bit later, which kind of paints a really cool picture. So we'll see. A lot of winners, a lot of green here. I'm really not going to look at all of these. What I will skim down here and look for is anything that is green on the day and green since open. Now, this can be a little bit misleading because if it's green on the open and it happens to be a short strangle that maybe we rolled, that open is only going to reflect the legs after the roll. It's not going to reflect the entire position. So I have to go look over at the order chains to see that and get a clearer picture. But it gives us really kind of a place to start. So let's take a look at ASX here. So 40 shares short is positive P&L on the day, but also positive P&L on the open. So if we go look at that, we can see here that we are trading between our short. Actually, I don't quite understand what's going on here because the chart we're after hours, so the chart's not going to reflect this, but we must be anticipating somewhere within these two right here, which is our cost basis and then our working order. So possibly a close on ASX after the open in the morning. And let's skim down. Is there another one? Intel. These are both short strangles, so nothing to get too excited about there. Nothing is in the money, so we just let them do their thing. Same with Citigroup, positive P&L. BAC, this is a short put, so we must have gotten a little bit of a rally after putting our short put on, which is good. We sold this one. What's the story on this one? We sold it for $1 and we're up 13 cents on it right now. So we'll let this one go and hopefully be a quick winner for us. And Caesar, nothing to look at here because it's also negative P&L. But it looks like it might have come back to us. Yeah, it came back to us just a little bit. In fact, it came about halfway to our working order here, but it didn't make it all the way. So we'll give it more time. Anything else we need to look at here? Let's sort the other direction and let's look at the red side here. PBR went against us some more. Look at that. Wow, there's a rally there. Now would be the perfect time to double down. But you know what? I already have negative 200 shares. I'm already short 200 shares. So I'd have to go short 400 shares to improve my cost basis. I can get my cost basis up here somewhere, but that's not a position I want to be in because CapRec on this is already $2,000 and I don't want to get this position any bigger. So I'm going to just leave it alone, hold my breath, and hope it comes back to me one of these days. BIL shows negative here. It's really not. This is one that just has to look like this, and we'll dive into that a little bit more, explain why it looks like that. But it's just a visual thing. And then Hood is down. Short strangle, we're not in the money. We are between our strikes, so nothing to worry about there. Oxy, short strangle, same situation. Between our strikes, we're a little close to the call side over here. In fact, it looks like we might have breached the call side. So the call's at 55. We traded up, over here, 56.30. So we breached it for a short time today, but we came back within our range. So nothing to really do there right now. If we catch it outside of our range, we might roll our puts up and see if we can balance the delta a little bit. Right now we're short negative 34. So not too bad there. And then DHT went against us and came back a little bit. If we had caught it up here, I guess our cap rec is right around in the range where I probably wouldn't have added to this position anyway. So catching it wouldn't really have made any difference. All right. So everything else is just kind of floating around there in the middle. If we sort here, we look in the money. The only thing we have here is PayPal in the money, and this one is an inverted strangle. We're trading right between our short strikes here, so we're going to just hold on to this one, and we'll at some point buy the guts, sell the wings, uninvert it, and we'll eventually turn it into a winner as well. All right, let's go take a look here real quick, just for some context. We should probably do this before we start looking at everything else, but you can see here on the E-mini S&Ps, we were down today. It's almost an every other day occurrence here, up, down, up, down, up, down. But you can see there's this little bit of an arch here, and we're kind of moving down here. And so with that, I would expect that we had a little bit of a spike in volatility. So let's go take a look at /VX. And as you can see here, yeah, volatility, or at least VX, came up here and near 23. Right now we're at 22.22. Let's go take a look at the VIX and see where it closed. Yeah, so VIX came up here. Look at that, 25 on VIX. But we ended up closing around 21.44 here. So if we zoom out, look, we have a this bigger spike that we had back here in April. We all remember that, and then a couple little bounces here along the way, but for the most part, we've been in a lull, and then we had a few bounces right here, and we've slowly been working our way up. So really, no surprise to see this spike here, and really, I think it's no surprise to anyone if we see one of these bigger spikes here in the next few days. Does that mean that we buy a bunch of puts? No, that's not how I trade. We could. But if we look at our theta right now, we have $120 a day in theta that we're collecting. If we were to buy a put, we would drastically reduce that, and then we would have time working against us while it's working in our favor, and so it kind of offsets each other. And I would just rather keep my portfolio risk at an area that I feel comfortable with, and then just ride through the storm and use my buying power to sell more premium when volatility gets high. So that's kind of the name of the game here. Let's see if there's anything else we want to take a look at here. We can hop into the dashboard here. We can see realized P&L year to date, 6.41. We've actually slowed down a little bit. Part of that is because from a static delta standpoint and just pure short long shares, I felt like I had enough positions on. I had several of them that went against me, and so normally we would kind of churn those out. We would put several on per day and close several per day, and I just felt like I was ready to move into a risk off situation for my static delta. And so as a result, we're not closing a lot of these static delta positions. Really, the only ones that we've been closing lately are our short strangles as they come to us. So 6.41 for the year is not bad. We are in the beginning of month 3, so 2 full months behind us puts us at around an average, I would say. Well, it shows here, I guess, 3.14% is the estimated monthly based on historical. So we're kind of looking at an estimation of 3.773 for the year, and 545 trades so far. If we just scroll down here a little bit, gosh, we made a whopping $8 on 3-2 today. We closed a couple of short strangles here to round this off a little bit. Net lick is about the same here. Actually just up just slightly. And part of that has to do with one of these days being Sunday and then one being Monday. One thing to point out here, this relationship between normalized theta and normalized extrinsic. We had this spike right here in extrinsic. That's when we rolled our short strangles out to the next cycle. So we collected a considerable amount of extrinsic value. And so that's the extrinsic value that we're going to see decay over the next, let's call it 23, 24, 25 days until the next 21 DTE. Kind of see that pattern right here. Now, it gets a little messed up in here because we did a couple of really short-term earnings trades that spiked that extrinsic up for a couple of days. But if you just look here, right up here, and then you look where we were, let's say right in here, there's that downward decay that you can see there. And then normalized theta, looks like it really stayed kind of the same for the most part. We did open a couple of positions when a couple of those were closed, so that's okay. Number of trades the last 30 days, you can see there's really been kind of a pullback in the number of trades that I've been putting on. You can see that extrinsic plus netlick is starting to poke its head up here just a little bit. We had some drag with some of those short and long share positions, static delta positions. And so idea is, it was a good experiment. It was kind of neat. It really had a market engagement component, but I really don't want to drag the portfolio, especially after we got hit with 6A and then a couple of those others that just went against us. So I think I'm going to just try to get to the point where we do primarily long theta, short premium, and then we'll expose just a little bit of the portfolio to some of the static delta, but not a lot. We're going to keep it extremely small. And then we have BIL. So let's take a look here at our allocations. Allocations here are just north of 50%. It doesn't give me a total here, I believe, but you can see it's somewhere in the 52% range, with options buying power being the one that's expanding here. Static buying power is, I wouldn't say it's contracting because we haven't really closed a lot of static delta positions lately. But once we do close those, that will continue to contract, and I'd like to keep that maybe in the 5 to 10% range. Like I don't really want to get very big in those because that's really not where the meat and potatoes are. And then just options buying power here, isolated, you can see the growth here, close to 25%. Now, if we get a spike in volatility tomorrow, we might sell some premium and we might jack this one up to 30, 35%, 40%. It depends on where the VIX goes. So I'd like to see that. I would love to see that. But anyway, that's where it is for now. So we're going to keep this short and sweet today. Thanks for watching Decay Factor. Join us again tomorrow for another session, and happy trading.